Hi everyone, this is Jacqui Cooper with JCooperTravels, and I want to welcome everyone. It's a new year. We all have New Year's resolutions, and one of our resolutions is always to keep organized with our receipts, with our filings, with our finances, and everything else that's related to taxes. And I have on Joshua, who's actually, we have a continuing series because, as some of you might know, JCooperTravels is not just about the travel around the world, even though we do talk about where we go physically. It's also about how do we travel in life. So it's dealing with quality of our life. It's dealing with our health, our wellness, our finances, and that includes both our personal life as well as our business. And Joshua is an expert in the tax and finance area, and we've had many conversations about both individuals, taxation as well as business side. And today, because it is in the January time period, even though whenever you hear this podcast, it applies to any time of the year. But I know that because at some point we're always preparing for taxes. April always rolls around.
Soon.
So, Joshua, welcome. What I would like you to do is to introduce your business. Let everyone know, because people might be driving and not able to easily write things down, how they can contact you. For those that are new to a podcast, I do include that information in the block of information below the YouTube as well as below the podcast. So you don't have to be scrambling for a pencil right now, but in case you do have one and you want to write it down, Joshua, go ahead and share out. And I really appreciate your being here today.
Yeah, definitely, Jacqui. Thanks again for having me. It's always great to sit down with you, talk, and be on your podcast. But for everyone that don't know, or maybe the first time seeing me, my name is Joshua Thompson. I own Thompson Tax Group, where we help with tax and accounting work as well. We do more of the tax planning side of things, helping you out throughout the year, create a tax strategy, or at least a good tax structure to put you in and create a tax plan that benefits you moving forward. And we also do tax preparation. So all tax and accounting needs, I'm your guys' guy.
So where are you based, Joshua?
So I'm based in Southern California. If you guys are familiar with it, in the Ventura County area, and Simi Valley is where I'm located. But we work with clients across the country. I have clients from Colorado, from New York to Florida to Texas. Work with everyone around the country.
So today's topic is how do we plan for our tax filing? Is that what we're going to be talking about?
That's right. That's right. How can we make the tax filing not such a burden at the end, or once it's time to file it?
So I'm going to explain to everyone what I've done, the good, the bad, and the in between. And I'm going to ask Joshua maybe some tips as to how I can make improvements. But keep in mind that I have many different businesses and I have many different income streams. So from that perspective, you might only have one income stream, which is great. You might have a business with employees. I don't. So Joshua is going to be able to help you navigate all those various things. And for those that don't know, my background, I'm a lawyer, even though I'm also a special educator as well as an entrepreneur. So many years ago, I love taxes. Many years ago, I was always doing my taxes, but then I decided, well, the tax code changed and it got thicker and thicker and more convoluted. And I decided there was no way that I wanted to take the time to keep up to date. So instead, I hired a professional. Now, to be totally honest, I'm not using Joshua, but I'm thinking about using him in the future. I have had someone for the past 10 years. So, but I do trust Joshua. And so Joshua, this is how I normally prepare for my taxes. I have a basket, and whenever I come in and if I bought something or whatever, I put all the receipts, all the bills, I just dump it in this big basket. So that way I know that the mess of paperwork is there. Now, the next step after I have my basket dump is I have files. And my files are organized by the Schedule C, because I file a Schedule C. They're also organized by the categories on Schedule A, and they're also categories by the categories in the 1040. So what I've done is I've looked at the forms and I figure out, okay, these are the standard categories. So when I have, after my basket dump, I will pull out and I'll put in my phone, or I'll put in my electric, or I'll put in my car, or I'll put in whatever the other categories might be. Now, the next thing that I do after that, so it is kind of time consuming because I'm not electronic, is that on the outside of the file folder, when I put something in there, I'll put the date for the month and the amount. So I know that my totals are on the outside of the file folder. So at the end, I have all those folders and then organized. I tell myself I'm going to do this, but I don't. I try to organize every quarter just to kind of keep up with the flow of receipts, but a lot of times it doesn't happen. And then in December, even though it didn't happen this December, so it's going to happen in January.
New Year's resolution.
I will be going through all the file folders, writing down all the totals so I can give that information to my accountant based upon the form that he gives me. So, ideas.
So first and foremost, really, I mean, I want to applaud you for having some organization, because a lot of times people just have that basket or filing folder and it's been there for 3 years since the last time they looked at it. So first off, good job on that. One good thing is when you're keeping receipts is to organize it like Jacqui's doing, but also one great thing that would help out is a program called Receipt Bank. Well, what it is you can literally take pictures of your receipt and link that to the transaction that you actually have. So that way you no longer have to keep that basket of receipts. As soon as you go out, or as soon as you get the bill in the mail of your telephone, you just take a picture of it, you link it to your transaction in QuickBooks or another program that you're using, and that way you automatically have proof of that charge. So that's one thing that always helps, but having it organized is great as well throughout the year, because you do need to have, in the case you're ever audited, you do need to show proof that you paid this. You didn't just pull $5,000 of a deduction out of nowhere. You need to have proof or an invoice showing that. And that picture really helps kind of declutter things as well. One of the great things as well, if you're also keeping track of it yourself, is to try and do it on a weekly basis. Because I know a lot of people I work with, it's one of those things where it's like, I'll do it at the end of the month, and then it's next month and a month after. I remember a client in the past that wanted to work with us or did work with us, and then decided to do the bookkeeping on his own. He's like, oh, I'm just going to take care of it myself this year. We saw him in March, and then he came back to us in December because he hasn't done it all year long. So it's good to always set it some time out on your schedule, at least weekly, to just put in the 4 to 15 transactions you had that week, because that's going to be a lot easier than having the daunting task at the end of the month, maybe 75 to 100 transactions you may have had. So
no, I agree with you on that. It can't, especially if you have more than one business, there's different things that you're doing, and especially if you want to allocate it to different businesses, you also have to think about that. So how long, this has been a question that's changed, how long do you need to keep old receipts and old taxes? Because underneath one of my stairs, I have these boxes, and I would love to be able to get rid of them. So how many years do you have to keep historically?
So it depends what you have going on, really. If you are an honest tax-paying citizen, you file your tax return like you're supposed to, which the majority of us are, then it's recommended that you retain those documents for up to 3 years.
3 years, not 7. That's
correct.
Great.
So it is 7 if you underreport your income. So if you're not an honest paying person and you report under, or you report less than, or you misreport by 25% or more, then you do need 7 years, because the IRS now, they can go back 7 years and look at your tax return instead of the 3 years that they are allowed to go back. And then if you have fraud or anything like that, then it's unlimited. They can go back as far as you want. So if you do fraud, which I don't recommend, keep your tax returns and all your documents forever. But really, 3 years is the key.
Okay, so 3 to 7 years. All right, depending upon what your comfort level is, because again, there are the unusual, and here's my dog. There's the unusual time period that might, I mean, like COVID, that's going to throw a wrench into a lot of people's businesses.
Yes.
The intent is to make a profit, but again, the difference between profit and hobby. So what other things have you seen that to make preparation for April easier? Oh, what about IRAs and those kind of
Yeah.
strange deadlines for depositing things where you could actually write more things off?
Yeah. So a lot of accounts out there, you need to, like your 401k if you're at work, I mean, you're the employee at work, you need to contribute by December 31st. Some other accounts, IRAs, if you're a SEP IRA, or if you're owner of a business, have your own retirement plan, you can actually contribute for last year up until this year, April 15th. So that's one thing you could do. One thing I always recommend is usually around October, November, December timeframe, if you are a business, is to check in with your bookkeeper, because you'll be surprised of how many people hire a professional bookkeeper thinking that they're getting everything done every month, but they're really like 2 to 3 months behind. It's real. Your bookkeeper should never really fall more than 2 months behind, and I say 2 months if they do taxes as well and they get super busy during tax season. That I would say that's the only grace period you should give them is 2 months. Anything more than that is usually a little bit too much. Now, if you work with a professional tax preparer, or if you just want a free one, happy to give you guys one. There's a tax organizer, which is basically a document, a PDF where you put in your information and it helps you keep track of, okay, yes to this box, yes to that box, no to this box. And what it does is remind you that, oh yeah, I did work that second job. I do need to look out for that W-2. Or maybe, oh yeah, I do have a mortgage. Let me make sure I get the 1098T so that way, or the 1098 so that way I can get that deduction. All right, items like that to help remind you and gather your documents. It's a good starting place to have that tax organizer. If anyone
So
wants, feel free to reach out to me.
that I was just about to say, that is something that another great reason to reach out to him. And if for some reason you don't remember which episode this was, just reach out to me, JCooperTravels@gmail.com, and I will make sure that you are put in contact with Joshua. All right, so big business, small business, individual. Any difference in terms of how they need to approach?
I would say the biggest difference is really the records and the bookkeeping. A lot of times, our individuals, you don't really have bookkeeping unless you want to do it for fun on your personal side. You really don't have too much bookkeeping. But as you get bigger and bigger with the business, you need to make sure you have the bookkeeping done. A lot of times, you want to talk with your tax professional really anytime throughout the year before you file your tax return, preferably before December, to talk about maybe a tax plan, figure out what is it that I can implement strategy wise before it's too late. And a lot of times people wait until it's too late, not realizing, okay, maybe I could talk about an income shifting strategy where I shift income from a high tax bracket to a lower tax bracket, or I do a expense shifting strategy, or where I utilize fringe benefits that allows me to pay for certain personal expenses with the business, and it's completely okay with the IRS. It's literally called fringe benefits, and we could go more into it maybe at another podcast because it's really a big, deep area, but it is a benefit that you could use kind of going forward or to keep track of really at the end of the year.
So that's something what you were talking about kind of triggered in my mind the thought that no matter what we've done in the past or even what we've done this year, we need to sort of remember when we realize that we didn't do something well, meaning maybe we're paying too much in taxes. So
Yes.
that way we can plan for the following year, because everything changes and the tax the rates have changed. And I know I was hit with a more tax when our tax code changed. And I thought that I was going to not be hit as high, but it's not that I was earning more money. It's just that the certain deductions were eliminated. And so all of a sudden, how I was mentally thinking I wasn't going to need to be paid taxes in certain areas because I had already pre-planned, all of a sudden I found out last year or whenever it hit that I did. So taking that information, I should have been thinking future forward how to plan for that. So what about kids and how does that help? Or, what about income from kids? I know that's a special little niche area, but we might have families that are listening.
Yeah, definitely. So kids are always a great tax benefit as long as you're in the income limits. You get the child tax credit, up to $1,400 of it is refundable, or you get a $2,000 credit. A lot of times, what a lot of people don't know about that credit is there's that $600 gap. $1,400 can be refunded if you don't owe the IRS, or you get $2,000 applied to your tax liability if you do owe the IRS. And a lot of times, what you want to do is actually it's beneficial to owe the IRS maybe about $600, between $600 to $1,000 at the end of the year if you do have a child. So that way you could take advantage of that spread between the $1,400 and $2,000 credit to benefit you that much more. Because if not, you're really leaving some money on the table for that credit alone, and that's at least $600, depending on the income limit. So that's a big thing with kids. Also, if you own a business, a quick tax planning tip that I'll give out is think about hiring that child in the business. And depending on how your business is set up, hiring that child can actually completely negate self-employment tax, meaning you don't have to pay Social Security, meaning you don't have to pay Medicare as the employee or the employer, and you don't have to pay income tax because you hired that child. Now, only certain business entities can do that, but it's a great way to save a lot of money on taxes.
Can I hire my dog?
I know, right? In photography. Oh man.
So now if you have just a traditional job, mm-hmm. and you don't have a side business or an alternative income, are you going to get hit harder because you don't have a lot of write-offs?
So it could depend, really. Having a business really opens you up to the tax benefits and basically benefits out there to most people. The tax code is written for business owners. Now, I've seen in the past, it's mainly business owners that have a tax bill at the end of the year. And this is often because they're either not working with a professional, or all the professional does for them is file a tax return and they're done. And they don't talk about how when you do file your tax return as a business, you now have to pay self-employment tax. And that's something a lot of us don't realize or don't know about when we start a business. But now you have a business, you must pay, 15.3% in self-employment tax as an employee in total, that usually you split between the employer when you work a W-2 job. So it's common that you'll see the business owner actually having to pay taxes when tax time comes. But if they're smart and they're utilizing the tax code, they're now writing off more things going on in their life, or structuring the business properly, or utilizing other things they have going on like real estate or anything like that.
So again, there's so much we could talk about. I know we're going to have continuing conversations, but I would suggest, tell me again, how can they reach you?
Oh, yes, thank you. So if you have any questions, feel free. My number is right here, if I'm pointing at it correctly, if you're looking at it on Zoom, but if you're in the car driving, my number is 805-364-0908. Once again, that's 805-364-0908. Feel free to reach out to me if you have any questions. Happy to answer your questions. My email is joshua@thompsontaxgroup.com, and the website's thompsontaxgroup.com. So Facebook, Instagram, LinkedIn, we're on all that good stuff. If you guys want to reach out to us.
Yep. And for sure, it will definitely be in the podcast below. One last thing that I'm just going to share with everyone who's listening. As you know, I have a variety of different businesses, both in the travel space as well as in the technology area. One of the things that I want to offer you, and I will definitely have it in the podcast below, if you think that you are paying too much on your monthly bills, I have access to a bill saving type of technology that's totally free. And you don't have to change your vendors. They'll negotiate a better rate for you. And by saving money on your monthly daily bills from your electric to your cable and cell phone and that type of thing, you can then put that into things that you enjoy. hopefully not taxes.
Yeah. Early
So,
retirement.
yeah, exactly. And like you said, so definitely reach out to Joshua so you can do some more planning, so you have more of the funds so you can use it for enjoyment, because that's why we're working. We're not working to always be paying the government. And so we want to have more savings so we can have more time and freedom to do what we want with our family. So that's the ultimate goal. Anyway, Joshua, thank you so much for being here. I know this is kind of a surface, but everyone just think about tips like this, because I know for me, if I plan my day and do a little bit like what Joshua said, then at the end of the year, it won't be as time consuming, and that's valuable in the long run. So thank you, Joshua, for everything.
Thank you for having me, Jacqui.